Hello, everyone. It's great to be here. My name's Nathan. I'm a partner at XReg Consulting. So we're a consulting company that specializes in global crypto regulation. So as you can imagine, I'm very passionate about this subject, and I'm glad to be here moderating this panel. So we have a great lineup of experts from around the world. But what I think is very interesting about this panel is that our experts not only come from different geographies, but they come from different angles in the crypto industry, and they play very different roles in the crypto industry. So I'm very glad to be joined by Thiago Cesar, CEO of Transfero Group, Chloe White, Managing Director at Genesis Block, and last but definitely not least, Ms. Christina Rolle, who is the Executive Director at the Securities Commission of the Bahamas. So I think before we get this discussion going, it would be really great if you guys could tell me a bit about what your role is in the industry and why crypto regulation is so important to you.
I think I'll start that off. I'm probably the only regulator up here. So our role at the Securities Commission is really from a general mandate to bring integrity to the markets. And that is important if markets will develop. I think where we saw ourselves as having a role in crypto regulation, particularly when we started this journey in 2018, is that we saw a market that was desperately in need of clarity, and we sought to bring that clarity to it. And so, I mean, that's it in a nutshell. I'm sure we'll talk more about that.
Great.
Perfect. Well, I'm Thiago Cesar. I'm the CEO of Transfero. We are the issuers of the BRZ stablecoin. It's a stablecoin based on the Brazilian real. We also have the Argentinian peso stablecoin as well. We're mainly known for being a fiat on and off ramp to FTX and multiple exchanges that want to access Latin America. I mean, for us, regulation is something that we were expecting, right? I mean, it would come, and now it's coming. I'm in crypto since 2012, back in the day. Had my master thesis about Bitcoin in 2013. Hassle to convince the university to allow me to do that back then. And I saw how the industry changed, right? I would enter a bank, they would laugh at me in 2015. It's the digital currency guy, you know, the internet money guy. And now here we are. Regulation is a topic that is coming to Latin America. It's coming to emerging markets. And to be honest, as a businessman or as a business, we have to find, as Christina said, clarity. Places that will give us assurance that we can do our business without any larger liabilities. And today, the time has come.
I've been working on crypto policy and blockchain policy development in Australia for the last 4 years, inside government and outside of government as well, working with industry and members of the community in Australia. And it's been a little bit of a slow journey in Australia compared to some jurisdictions like Singapore and the UK and the EU, but certainly there's a lot of momentum in Australia now, and the policy development process has picked up a lot of speed in the last 6-12 months.
Great, thanks for that. So maybe just starting with you, could you expand on the developments in Australia? What are you seeing in Australia? Like, where do you see things going?
Yeah, Australia started looking at crypto policy around 2013, 14, 15, looking at issues related to tax and also related to money laundering. There was an early Senate inquiry at that time. And so from that point onwards, Australia has had anti-money laundering regulations that have applied to crypto exchanges. And there wasn't a huge amount of policy development from that point on until 2020, when the government released a 5-year plan to help grow the blockchain industry in Australia called the National Blockchain Roadmap. That roadmap was really largely focused on how blockchain could be applied in industries outside of the financial sector, but now the focus is very much on the financial sector and on crypto assets. And so there's been a lot of work done and another Senate inquiry in the last 18 months that has really looked at where are the harms that we need to mitigate, and also what are the opportunities, and how can Australia be a leader in the space? And so one thing that the Australian government is looking at the moment, which is quite progressive, is decentralised autonomous organisations, and whether we could be a leader globally for DAOs as a legal entity. But there's also a lot of work being done on custody licensing, market licensing, and a range of other regulatory issues.
Perfect. Yeah, and I'm sure we'll be touching on DeFi and a few of the other interesting elements of the industry towards the latter end of our panel as well. And yeah, I think it's interesting to see how governments are they've more or less tackled the AML side of things and are looking to build on their frameworks. So, Thiago, do you maybe want to tell us a bit about what's happening in your part of the world?
Well, Latin America, very diverse continent. I'll speak more about Brazil in this case. Regulation in Brazil was born, let's say, on the wrong way when it was born. We have to always remember that we talk about regulation, we think about the regulator, but we have to remember that whoever passes the law is responsible for what the regulator will enforce, right? So in Brazil, back in 15, if I'm not mistaken, or 16, one congressman tried to ban crypto transactions because that was a knee-jerk reaction on Ponzi schemes. So basically, regulation talks in Brazil started from congressmen who were worried that people were getting scammed with Ponzi schemes, as if Ponzi schemes didn't exist with other stuff, not with crypto, right? So that's the thing. The Ponzi schemes, by the way, in Brazil are a national sport after football. In regards to that, at least we had people with vision in the Congress, and they shifted the discussion from that Ponzi scheme-related thing into a more sane discussion about a new industry that is changing the country, right? And when we talk about regulation in Latin America, usually there are two aspects to it, right? One aspect that Christina obviously knows a lot about is Securities Commission. What is a security? Does it fail the Howey test? Are we offering products that shouldn't be offered without proper registration, filing, and everything? The other aspect that is very important in Latin America is capital controls. So most of the countries, they do have some extent of capital controls. And the central bank is very, protective of their foreign currency reserves. So when we talk about regulation in Brazil, we're usually touching those two topics, plus the Ponzi scheme part, which is still in the law. So that's how regulation developed. The recent news is the Senate passed a bill on crypto regulation in Brazil 2 or 3 days ago. So Brazil will have a crypto license, in a sense, coming. But it has to be signed by the president. And we know, Brazil, politics, Russian roulette. Every 4 years it changes, might go fast, might not go fast. But the direction is quite clear, right? Whatever the US or Europe points towards, Latin America kind of follows, and then we have it.
Interesting. And I think you make a very interesting point in the separation between policy and regulation, which I think is often misunderstood in this place as well. Mm-hmm. I think a lot of people blame the regulators for not delivering when a lot of the emphasis should be placed on government for making sound policy and allowing crypto to develop in particular jurisdictions. So yeah, definitely, I think Christina has some great views on this, and I think the Bahamas as well is a place.
So the journey in the Bahamas was probably a little bit different than it was in Australia or in Brazil. I think we began around 2017, began to see interest from the market in looking for a regulatory home. So I don't know that there was locally grown activity that spurred the development of the regulation as much as there were international players who were really looking for a well-regulated environment. And so this started to begin in 2017, and it was at that time what I referred to the industry creating a regulatory race. You know, and so in 2018, we're, as you know, securities regulators, and so I think it was at an IOSCO conference that it dawned on me that, you know what, we need to start looking at this space in earnest to develop a regulatory framework. And when I say looking at the space in earnest, you know, if you can imagine, you know, we're securities regulators at securities conferences all the time. So the conversation among securities regulators really was around when crypto becomes a security, how you treat crypto as a security, how do you get it within the perimeters of your scope. Some of the things that we realized when we started, and we were very collaborative with the industry, with players to first benchmark the space, and benchmark what regulators were doing around the world, as well as to understand what the players in the space wanted from regulation. It became very clear to us that these conversations about when a crypto becomes a security was really in the context that securities regulators were confined by the perimeters of their scope. And so we realized that to address crypto holistically, we had to go outside of our security scope and treat it as its own asset class, if you would. And so one of the benefits of being in a small jurisdiction like the Bahamas is that we have the kind of nimbleness that we are able to develop regulation. While it's based on principles that we know as regulators, we're able to develop regulators and bring the policymakers along and say, you know, this is what the market is looking for, this is what it needs. And so we developed that, the legislation with that approach in mind. And we realized that there were a couple areas that we wanted to focus on. So those areas were particularly digital asset businesses, particularly digital asset businesses such as exchanges, custodians, wallets, those types of digital asset businesses. And then we wanted to focus on the distribution of tokens and how a token can be registered for distribution. So those were things we knew how to do in principle as securities regulators. We didn't know how all of that looks in the crypto world, but we learned enough about crypto to apply what we know as regulators. In terms of what's next for us, DARE was enacted in December 2020, and since then there are things in the space that have evolved since 2020. Things like stablecoins. Stablecoins, we were just beginning to learn more about stablecoins. Now we see that stablecoins, for example, have evolved to the point that we probably need to start addressing investor protection issues. Issues such as valuations, disclosures, financial reporting, you know, these types of things. We also see the need to address DeFi generally, and issues that are unique to the space, such as staking. So those are the things that are up next for us, things that we're looking at, how we will adjust the framework to adapt to those types of things.
And I think it's really encouraging to see a regulator thinking about those more unique and innovative areas in the industry, definitely. So, yeah, you don't have the easiest job.
And she does it fluently, right? It's not easy to go to a country, find a regulator, and have that kind of exchange. We talk about DeFi, they're like, what?
Exactly.
Yeah, so.
So just to tell people a little joke, Thiago asked me in the back, you know, how come I'm a true believer? What's my background? I said, well, it may be because I played Dungeons and Dragons in college.
So she's the real deal.
Yeah, I think there's a... So yeah, I think, Christina, this one's for you. So, and I think for the benefit of the people in this room and the people watching, what do you look for as a regulator for in a business, in a company that's coming to the Bahamas that wants to be regulated here?
Okay, so I would say the short answer is it depends, right? The longer answer is that as a regulator, of course, you know, we have a very robust applications process. Service providers who are coming to the Bahamas should expect to give information on the entity itself, its directors, its shareholders. They should expect that we will conduct robust due diligence on those parties, but they also should expect that we will conduct a thorough assessment of their operations. So they'll need to provide their business plan, their operational procedures, their compliance procedures. And in conducting that assessment of their business, really what we are looking at is their operational capacity. And what we want to see, because At the moment in this space, we put together a framework, but at the moment in this space, every business case looks different, And so what we really want to see is that your operational capacity issues has been thought through thoroughly, and that you're able to address issues like how you're protecting client assets from loss due to theft or fraud. Obviously, we would like to see a physical presence, but again, we recognize the different business cases in this space, the fact that it's evolving. So while we would like to see a physical presence, this is something that we're very flexible on.
Great, and I think here, Chloe and Thiago, do you want to maybe tell me a bit about what you would, like in an ideal world, what is an attractive framework? What do you think policymakers, regulators should be doing when it comes to crypto?
The number one thing for me is it has to be flexible. It has to be able to evolve with the industry. One of the speakers was saying on a panel here yesterday that he didn't see the NFT boom coming. I didn't see the NFT boom coming. I think a lot of us didn't see it coming. We don't know what's going to come in another few years' time. And so one thing that I think is a bit of a trap for policymakers or regulators is to try and look at the crypto space as it is today and say, great, we've got all these categories of things, let's try to define them and then we'll regulate according to that snapshot, and then you come back a couple of years later and it's not going to fit anymore. And so I think that there needs to be some willingness on behalf of policymakers and regulators to engage with risk and not try to eliminate every single harm and in every conceivable scenario. We, of course, want to make sure that there is market integrity, that there are levels of consumer protection. We need to have good standards in place. But I think that there needs to be some willingness for failure. And so that open-mindedness and flexibility, I think, that's the ideal approach.
Great.
Well, I mean, from my perspective, which is very common in Latin American countries, we just would like regulators who do not change the past, And it happens quite often in Latin America. Brazil has gone a long way to give more clarity on things, guidance, principle-based. There are examples in the past. For example, there was this guy, I believe in the 2000s, he created this internet application where when a person traveled abroad from Brazil, he went to the United States, he came back to Brazil with dollars, right? Because he didn't spend all in Disney to see Mickey. He could actually sell those dollars to his peers in Brazil. That was considered illegal, and the guy was fined in like astronomical amounts, almost went to jail. So that was the regulator of the past. Today we have a different approach in Brazil, which makes me happy because that uncertainty that if you do this little thing and you can have this terrible consequences was scary for Brazilian entrepreneurs, right? So one real case was 2016, my company receives a letter from the central bank and says, come to the capital city, that in Brazil is called Brasília, is not Rio de Janeiro, and explain your business to us, this crypto thing and everything. So when you get a letter from the Brazilian central bank, you think, okay, am I going to jail? So I'm not in jail, which means it was okay. So what the central bank told us, which I think is the important part, is, Thiago, find a jurisdiction that has more clarity and a more advanced regulatory framework, get regulated there, bring those best practices to Brazil, and at least we can see you are legit, right? You are doing something. So that was amazing to hear from the central bank, we recognize we do not regulate the topic in Brazil, but find somewhere that regulates and bring it. So in 2017, we went to Switzerland, and then the world started moving in that direction. So that's what we expect from a regulator, to be honest. In 2022, you have to have that exchange of, it has to be a dialogue, not a monologue, right? And that's what we expect.
Great. And yeah, I think we've seen jurisdictions around the world starting to take crypto a lot more seriously in the past few years, and there's definitely policy development all over the place. I think largely because of the FATF standards, which has made countries at least implement AML-CFT frameworks. So I think what we've seen in the past few years, we've seen a lot of countries starting to implement these frameworks, at least to cover AML-CFT. Now that it's kind of getting out the way, at least in most countries, what do we think the next thing is? And we've seen developments in the UK, for example, on crypto derivatives for retail. There's moving to more of like a consumer protection angle. We've seen developments in places like Hong Kong, Singapore. So it kind of feels like once AML is out of the way, we're moving more to like consumer protection. But what do you guys think? What do you see next from a regulatory perspective? What do you think the next big thing is going to be?
You want to go? So I think that so far, if you really look at the way the regulatory frameworks have been developed, and it's not just in the Bahamas, a lot of them already address consumer protection type issues. And I will distinguish consumer protection type issues from investor protection type issues. And I think the next thing is investor protection type issues, so issues around custody, and how the custodian uses client crypto assets, whether they're lending them out, whether they're using them for staking. The regulators are now going to have to understand the implications of these issues, which are quite different from the securities market, and have to adapt to address investor protection concerns with these types of issues. I think that there are also cyber risks that have to be addressed. I don't think, though, that while regulators are going to be concerned with cyber risk, we're not going to be the ones to provide the solutions for cyber risk. I think the market will provide the solutions for cyber risk, because obviously no one's going to put their money with a custodian or a wallet who doesn't have a well-developed platform to protect against hacking and theft. So I think the market will provide the solutions for cyber risk. But I think as regulators, we'll probably begin to look at investor protection concerns.
Great. Any other views?
Well, I mean, in Brazil at least, just to make it more spicy, right? The local Securities Commission, they try to protect the investor so much that the retail investor from themselves that the retail investor doesn't exist. So it's also dangerous in some countries when the approach is too heavy-handed. So for example, that's a data, right? You have more people registered on crypto exchanges in Brazil than you have on the national stock exchange, right? That only means that maybe regulation on the national stock exchange market was so tough that the regular person couldn't actually access it. So there's another angle on regulation as well that I find it a bit like unbalanced, is that, for example, our business, we don't take cash, right? We're not crazy to do it in Latin America. We only take electronic bank transfers. But whenever there is a problem, the bank gets away with it, and we are the culprits, And I mean, the first line of defense and the entity that has way more resources to check, red flags, lists, everything, is the bank. Because ultimately, all the transactions are happening through the bank. So there are countries that are putting a very heavy hand on requirements by crypto players to check, verify, AML, which are important, but the banks are kind of left out of that, and they're just passive passengers in this story, And I think this should be well-balanced, more well-balanced.
Great. Where do you see things heading, Chloe?
I think different jurisdictions are going to focus on different gaps in their policy regimes, because they've all started from slightly different focus points in how they've gone about things. So, obviously one of the big issues in the US is people really want to see a spot ETF. And, one thing that does help to coordinate some policy development is that we have bodies like FATF. So similarly to that, I'm looking forward to seeing more work from the BIS on prudential policy. And the reason why that's something that I'm interested in is because I think if you can give guidance to TradFi about how they can engage with crypto assets, that unlocks an entire value chain of new products and services that can be brought to business and to retail. And the fact that those prudential policies haven't yet been spelled out is holding back things like, a bank being able to offer a Bitcoin-denominated loan or take Bitcoin as collateral on a loan. And so you really build out your financial stack when you have those kinds of critical regulatory guidance in place.
Great. Good. So I guess I wouldn't say it's easy, but the majority of developments in crypto regulation has been very focused on centralized exchanges. Most of these platforms, even the usual ones that we see, they take custody of funds. They operate very similarly to the traditional financial markets and the financial world. And it's not the easiest, but it's relatively easy to apply similar principles and approaches to these entities. We've just been discussing, started off with AML, a lot of action on the customer protection side, prudential requirements, cyber. It's very easy to take a lot of these approaches from the traditional world and apply on these centralized exchanges. So I think with the time left, let's start talking about the more interesting, innovative areas of the industry, things like DeFi, NFTs. As a regulator, how do you think we should approach these more challenging aspects of the industry? How do you start applying approaches, even traditional or maybe even new approaches to these types of new activities? And maybe we can start with DeFi.
So if you, for example, start with FATF's approach to DeFi, the implication of the FATF guidelines is that any application that is a DeFi platform is essentially a VASP, a virtual asset service provider. And so in that context, I mean, that's interesting, but in that context, I think as regulators, we're going to have to recognize that while we may want to call those application VASP, not every transaction on those applications have a finance implication. They're not all finance transactions. Some of them are consumption-based transactions. And so we as regulators are going to have to distinguish between consumption-based and finance-based transactions. And we're going to have to be able to, I guess, exist in this world where the lines are blurred between them.
Yeah.
There's a lot I could say on that topic. What else I'll say, though, is that the one issue for me as a regulator that I think the crypto world may not be realistic about in this DeFi permissionless environment is this issue of anonymity. And while I'm probably a proponent of anonymity, I think that for the crypto environment, you will have to recognize that if you want to transact in the world and if you want to participate in the systems, you will not be anonymous from the regulators, you will not be anonymous from law enforcement, and you will not be anonymous from the tax authority. So while you may be anonymous from the blockchain itself, you'll not be anonymous from these entities. And so I think the challenge for the crypto environment is to accept that and to move forward in that way.
All right, great.
Yeah.
I've just noticed we don't have a lot of time left, but if you just want to give you some thoughts on.
I would just add to Christina's point that there's a difference between anonymity and privacy.
Yeah.
And you may not be anonymous in the system, but it's still really important to treat people's sensitive information in the proper way. And we can actually leverage the technology of the space to help achieve that. And there's some really great research happening on zero-knowledge proofs and how you could use that type of technology to actually achieve all of these aims. So I think one thing that's important for policymakers and regulators to look at is there are actually some areas where we have regulated traditional industries where we can actually deregulate because the technology solves a lot of problems that the regulation was intended to.
Perfect. And Thiago, any last?
Well, I guess all the points were very well put. What I can add is we have to remember, on a DeFi application, let's say you bought Ethereum in a place, staked it on, a dApp, and then you generated yield on that. How enforceable it is, right? So we actually have to ask our questions like, can actually, regulators can talk about it and can actually theorize about it, but there are a lot of things that I see an operational challenge, right? How to actually enforce real-world rules on quasi-real-world problems, right? So it's a challenge. Unfortunately, you have to deal with that. My job is to build and make sure it's compliant.
Definitely a challenge. And I think with DeFi, you're just breaking apart the financial system into multiple components, and those components can be operated from different jurisdictions all around the world. So how do you identify who to regulate, I guess, is the question. So yeah, really interesting discussion. I'm sure we could have been here for another 2 hours or so talking about DeFi regulation and NFT and all kinds of other things. So yeah, thank you very much for being here, and thank you.
Thank you.
Thank you very much.
Thank
Thank you. Thank you.